Good afternoon, good morning, or good evening, depending on what part of the world you are in. Happy Sunday or happy Monday, again, depending on what part of the world you are in. Welcome to episode 3 of the Nasdaq Futures ICT Weekly Outlook series for 2026. And as always, we are starting off this review with looking at the economic calendar. I also have 2 other websites that I find useful for my trading that I will be going over as well. So on Monday, we have no orange folder or no red folder for that specific day. It is a no news Monday, but I will be actively looking at that day. I don't have much high expectations for volume, so we'll be aiming for base hits. And I will be waiting for the 9:30 volume to come into the market. On Tuesday, we have a red folder GDP at 5:30 my time, 8:30 New York local time. Again, on Monday, that is 9:30 New York local time that I'll be waiting for. This is just my Pacific Standard Time. Now, with that being said, we have plenty of orange folders for the day, and we have one high impact news. As I stated before, the GDP. I will also be waiting for minimum the 8:30 news to come out for the GDP, and I will be waiting for the 9:30 New York local time to be taking in trades, preferably during the 9:42 macro, to try to see if the 7 a.m. can push towards my objectives if a trade presents itself. On Wednesday, we have unemployment claims at 8:30 New York local time. Again, for this day, I will be waiting for the news to come out to pick my specific PD rates to take trades from and my time-based liquidities to target after the news has been released. And again, I will be waiting for minimum 9:30 volatility to come to the market. And again, the 9:42 macro to execute. On Thursday, we have a bank holiday. Bank holidays are notoriously horrible, and I will not be looking at that day. And it is also Christmas in America. So I will really not be looking at the charts for Thursday and Friday. Friday being a no news day after a bank holiday. The days after bank holidays also tend to be a bit slower in my experience. So that's just another reason to not look at Friday. Personally, I will be not looking at Friday. If you are going to be looking at price action on Friday, be aware of what price is already done. We may have already hit the target for the week. We may have already done a few things that price action on Friday can be unfavorable. With that being said, let's get into the 2 other websites that I believe are useful when looking at what days to trade and what to expect for the week. So the first one I will go ahead and show you will be the CourierChart.com, the earnings calendar. I'm not sure if I could even say that without getting excited on YouTube. But this is a very useful tool when trading for the specific week. We don't have anything major or any big AI companies or anything like NVIDIA, for example, having any earnings reports. So the economic calendar is in more than enough to plan for your week. If there was a day where earnings for a really big company, one of the Magnificent Seven, for example, was coming out, then that can be a reason for a price to be stalled and wait for earnings. So when planning out your trading days for the week, it's always a good idea to check what's going on in the macroeconomics. Now, for this specific review, we are switching contracts. We're moving over into the March 2026 contract. But before we get into the charts, I want to show you where you can find that information. If you go to the CME Group website, you can check many things, but they have this specific tab where you can check the volume and open interest. OI is open interest, as you can see over here. We have open interest. On the previous weeks, I was doing the reviews on the December contract because it had majority of the volume and majority of the open interest at the close. So here we have switched over to the March contract. As you can see, there's way more volume. There's way more volume in the March contract all the way around that. So it's very obvious that the March contract is the one that you want to be trading. Even though we're still in December, the March contract is the contract you want to be paying attention to. And eventually, when we get to June or closer to June, you'll see these switch as well. So you can go ahead and screenshot this, save it, and use it for your trade. Okay, now we are looking at the daily time frame of the E-mini Nasdaq futures March 2026 contract. Currently, the market is closed, but it will be opening in the next few minutes during this interview. So it'll be nice to see that happening in real time. Now, when looking at this chart, most people might think that the last few days or this past week was a bearish signal and that the market is tanking and that this move upward is fake and so many things, so many opinions, right? And in my opinion, we are now back in sync on the higher time frame for E-mini Nasdaq and the E-mini ES contracts. With that being said, the reason why I think we are in a buy program and this move lower was just to find a discount after we had a change in the state of delivery, but specifically because of a few things. One, we have monthly SMT here with YM, and we have a CSD here. Actually, let's go ahead and use this. This here, let's make it red, so it's very obvious. CSD. In my opinion, this was our CSD. This down close candle is our order block that created the CSD. Not every single down close candle in an up move is an order block. It's the candle that creates the low and the leg that makes the CSD that confirms that that is an order block. ICT, I said it before. If you don't believe me, I suggest you go and really study his YouTube channel because he 100% says that in his YouTube, that that is the definition of an order block. With that being said, the reason why I chose this specific high as a CSD, after we created our all-time high here, you can see that we have multiple swing highs, but we never specifically had any body closure above the swing high. And here in this specific leg, you can see that we do. Here, we do take one of the swing highs, that we failed to close above it. So that is not a CSD. And then we come lower, form another swing high, fail to get above it here. One more time to form this SMT, which I want to point something out, is that these specific days, if you do the math behind them, are power of 3 days, which is why you see the 9s here. But that's for your own homework to go and suggest. Now, another thing I want to go ahead and point out here, if we take this entire candle's range from high to low, we see something very interesting here. Look at how the bodies perfectly respect the medium threshold, which is 50% of the order block. If you take the entire candle's range and we use 50% of that, you get the medium threshold. That is not random. Another thing that we do here, we have SMT here at the lows with ES. If you go look at ES, there's a fractal SMT between these two lows. And again, one of these lows here, being one on Nasdaq and one on ES, is a power of 3 low. Again, I encourage you to go and look at those specific dates, do the math, and see how the powers of 3 are forming highs and lows in the market multiple times in multiple places. So if this is the CSD leg, then you would like to see 50% of that medium threshold of that order block that created the CSD be respected. And we are getting that. This is how you build narrative. You don't go based off emotions or tweets or posts you see on X from a specific person or entity. We let the charts do that and we let math do that for us. Again, this is just a little bit of narrative behind why I am still bullish, even though we had these consecutive down close days, which in my opinion is just forming another low to create a new all-time high to then continue higher in the market. So let's go ahead and write that out here. Go ahead and clean up this chart a bit. And let's write around there. And then we're going to write MT as an abbreviation for medium threshold, just so we know what we're, just so we know, yeah, we have that line there. Now, what would be our targets? Well, we're probably already, did we take it? No, we did not take it. Did we take it? Almost. Jesus, we are. The first target that I was going to aim for this week was previous weekly high. We might have already taken that with the new week opening gap. That is pretty nice. And it's also nice that my indicator that we have here at the Market Maker School automatically plots all of these things. The only real thing I have to do is have these CSD lines here, which I honestly wouldn't have because I already know that's a CSD. But for you, while you're still learning and trying to follow along with this weekly outlook series, it is a good idea to have these few lipstick on the charts. Now, first target is already reached. Monthly open could be the next low-hanging fruit, but the main target that I would be aiming for this week would be these daily SIBI that we have here. The low and the high of that SIBI I would be paying attention to. Once we draw into that, I would like to see the close above it, use it as support to then continue higher to take the previous monthly high and then the all-time high. And then how much higher can we go above that? I would personally be looking at the next big figure, which is 27,000. As a target. Now, if you can catch any one of these expansions towards previous monthly high or some sort of retracement now to go into the monthly open or the all-time high, all you really need is one to maybe two trades this week and then call it a week. We have Christmas and a bank holiday in the same week. Spend some time with your family and enjoy yourselves. With that being said, let's go into the 4-hour time frame just to give you guys a better inside look at what I would be aiming for. Now, what would invalidate the buy program for me? For me, we have the SMT that I created with ES. That is the absolute invalidation for this week. Very simple and straight to the point. This is the invalidation. So that means that any retracement lower to any of these fair value gaps here, and these would be the last form of defense that I would say, right? So it is okay for it to come to all the way to these lows, really, if it wants to then continue higher. Any retracement lower for this week is a fractal market maker buy model forming. Any retracement is going to be viewed that way. Any and every retracement, again, will be viewed as a retracement and not an expansion lower due to the S&T and this expansion that we had here last week. Specifically, when I would be looking to take trades, is this high here, which we have not taken. We formed equal highs for now, but that's pretty crazy. I would like to see those highs stay intact. That'd be pretty perfect. A retracement anywhere in this area to then continue higher. Once we can close above the opening price of this candle, which is a 9 a.m. candle that formed the high of the day on this Monday, not a random candle, I would be paying attention to the opening price of that candle. If we can get above that opening price of that candle, then I would be looking for expansion on Monday, Tuesday, and Wednesday. Again, a retracement here, then I would be waiting for signs of a CSD and a lower forming. Whatever a low formation of reversal looks like for you is what you can be looking at. But here, I'm paying attention to this candle to be closed above if we don't get any retracement at all. If we don't get no retracement and we get a clear close above these two, one, the previous weekly high, and the opening price of this 9 a.m. candle, then it would be a continuation model. Or scenario 2 is that we get some sort of pullback here before Monday's or Tuesday's or Wednesday's New York session, crack in correlation, SMT during my time of interest, a CSD that I seem valid or that I find valid, and then I can attack from a lower stance. But until those two things play out, one, clear close above, retracement to then continue, or retracement lower with a crack in correlation, SMT with a CSD during my time of interest, and I'll be looking to attack higher. And that's it. That's all you have to think about for this week. There's nothing guessing about my approach. It's very clear. My targets are higher, my invalidations are here, and my last points of interest that I would allow for retracements are here. Just to go back to the 4-hour to show you why, we have two breakaway gaps here that it can't come into, and a fair value gap here. Preferably, I would prefer to see it come somewhere in here. At the most, like I said, would be here. To remind everyone why, we have our SMT. Yes, we have monthly SMT here, but until this SMT, and specifically this SMT is invalidated, the draw is higher for me. We have a volume imbalance here, this fair value gap, and a bit of a volume imbalance between these candles, with the previous monthly high and the all-time high, and 27,000 being the draw for this specific month. And I'm calling it now, that could be the high of the year, 27,000. Good luck, good trading, and have a great week. And as always, remember, if you would like to be kept up to date with my points of interest and my daily outlooks, join the Market Maker School. Link will be in the description.